Ladies and gentlemen, I have a super special episode for you guys. We're going to be doing a podcast with Carter, and he's a really good futures trader. He finished all of the CMT curriculum. He's about to become a CMT charter holder once he's sponsored. And yeah, we met at the CMT conference in Minnesota, and he is one of the smartest 25-year-olds that I've ever met. So I think you guys are going to learn a lot today. You're going to learn a lot about futures trading. We'll talk a little bit about the current market environment, and then we'll also give some trading tips and tricks. So how are you doing, Carter?
I'm doing well. I wish my camera was working because I like being on camera, I like making
Yeah,
videos and stuff. So I
yeah.
apologize for that, but I'm
No,
doing well.
we can do it next
Again,
time.
markets are pretty crazy right now.
Seriously.
And of course, craziness, brings opportunity. So
Hell yeah.
I'm excited to kind of share what I've learned through honestly looking at some different charts.
Mhm.
I am a footprint trader, which I think many may have maybe experienced or maybe taken a brief look at it. But if not,
Definitely.
maybe this will open the door into what many would call order flow analysis. So
Mm.
I'm really excited to share what I've been learning, what I've learned, and how I kind of applied for my trading. And if it's something that you guys pick up and want to apply to yourself, feel free. And of course, I always want to be a resource as well too. So make sure you plug some of my socials or something at the end, and
Definitely.
have
I
your
will
have your
definitely
have
plug them
everyone
at the
reach out.
end.
Yeah, of course.
So where do you want to start? Do you want to just jump right into footprint? Do you want to talk a little bit about your story, your journey, your trading journey?
Yeah, I kind of want to
I'll
start
let you
about
take
my
over.
yeah. I'll start with my trading journey. So, like Greg said, I'm from Maple Grove, Minnesota, so the west side of the cities. 25 years old. Currently live right around Minneapolis right now, but I went to school in Eau Claire, Wisconsin. So not a big finance school at all by any means, but I studied finance and econ. But had always had a passion for trading. Very lucky, my parents had a financial advisor when I was growing up, and that's what kind of got me into finance. Not specifically the trading world of it, but just understanding relationships, investing money at a young age and having it grow for you. So as I was kind of deciding colleges and stuff, I decided a medium-sized school doesn't really, not a huge finance hub, but I always had a passion for investing. And that's where I kind of got into the niche of, joining a finance club, met other people that would talk about trading, and fortunately or unfortunately, I got introduced to, options at early on.
Yeah.
Um, some people have had
What do you mean
success
by
with it.
fortunately or unfortunately?
Yeah, exactly.
Yeah.
So fortunately for me, like I had some great success at the start, but unfortunately, ended up losing money and honestly paying my tuition to the market. Over that period of time, like, it wasn't terrible. Like I wasn't like, in any financial distress. It was just like, oh, some money that I earned over the summer. It's like, oh, I lost, 4 or 5 grand over, a few year period of time. I wasn't seeing any progress, but reality was I wasn't really learning much about like markets. Again, I think Discord and communities are a great community, but at that time I was joining communities and just taking signals, taking signal groups and really wasn't learning. And then when I kind of really got serious, I was like, if I really want to learn about markets, I kind of started focusing on the charts. And I think that kind of brings us into the CMT journey and how we met each other is, I kind of got to the passion of learning charts more and more and figuring out, ways that I could apply, my knowledge to the markets and hopefully generate some sort of alpha for myself. So really upon graduating as well too, I kind of got introduced to futures through a friend and even just kind of in that community of trading options and actually started, kind of working in the space a little bit, trying to get funded accounts and of course getting payouts. And last year was, my most successful year. And, I'm really happy to say that because after a long grind of like, doubting yourself and, losing money, you're at a point where you can feel confident looking at markets now.
I totally get that. And so when you were getting those payouts, what was your main strategy? How
Yeah.
did you find success?
Yeah, how would I find success? So I would say footprint relatively for myself is probably about a year and a half. I would say the way I was trading it then is not how I was trading it now.
Okay.
But to be honest, I think I kind of spoke with about Apex was that, Apex before a lot of the rule changes, you could in theory kind of game the system. I was able to kind of trade out of, what I would consider and part of this strategy as well too is using supply and demand, support and resistance, where you're able to DCA into positions and of course
Yep.
have multiple accounts. I was able to again use large orders, rotate multiple accounts at once, and be able to, hey, I'm paying $100 here, but I'm getting 2 grand worth of payouts, and I could in theory blow multiple accounts.
Yep.
But then again, stacking accounts and accounts and accounts, able to take some pretty large payouts. So again, those rules change, and then trading had to change, which I think, honestly, I know there's a lot of haters of Apex maybe right now, some of the rule changes, but I think it's make people a better trader if their goal is to create longer term profitable traders. One, as you as a trader need to adapt, but two, I think it will make you a better trader. So
And that's because of
very
the
interesting.
30% rule, right? Where one green day can't make up more than 30% of your total profit, correct?
Exactly. Yeah. Exactly. Yeah. And then, like, I wouldn't say that I was, trading or YOLOing on any news or anything like that. It was just,
Yeah.
hey, if, I found an area that I considered larger, demand or supply, and was looking at the footprint chart and maybe seeing, some sort of indicative tool of like order flow, like, hey, it looks like buyers are supported here. You're able to DCA in positions. And of course, if you get a large, massive move, and again, before that 30% consistency, you're able to then pull out a lot of money.
Yeah, you could like
Over
straddle the accounts, right? Long
exactly.
some, short in others. Yeah.
Exactly, yeah. And so, using, I mean, again, it's not ethical in any way, but at that time, that was before the rule changes and stuff like that. But now I think these rule changes are very beneficial for the trader. Although a lot of people, because, yeah, a lot of people maybe kind of got caught and weren't making like any money anymore because they weren't able to game the system, as I would say.
Yeah. Everything has a benefit and a drawback, and we just got to play the rules that we're given.
Yeah, exactly. So, but if you guys are ready, we can get into footprint. I'm gonna try to start out as basic as I can go, and
Yeah.
kind of build the charts out by it.
Yeah,
And then
start
kind
out
of really
basic
walk
and then become more advanced over time.
exactly, and then we'll walk through. I did download, and I use NinjaTrader for my trading, and so I downloaded about last week's trading kind of data with the book map, or not the book map, with the footprint. Again, there's a lot more data that goes into it because you're actually looking at individual orders within candles. So able to download a little bit of a week, and so we can maybe take back and look at some trades and opportunities, and then maybe what I would consider a good trade or a bad trade, but again, kind of based on the evidence that's provided through the footprint.
Let's do it. So
Yeah,
I see some
perfect. So,
Heikinashi up there. I see.
yep. Yeah. So we'll start. I'll flip my screen right away. We'll get back to this chart, but this is,
Yeah.
I use TradingView for kind of my bigger picture trading. But first, initial start walking through the footprint here. So again,
I love this.
here we go. So I just really want everybody to focus on this candle right here. One thing I do want to say is that footprint or just any trading strategy can work on multiple different time frames. Everything is micro or fractal of each
Yep,
other.
fractal.
What you're looking at right here is a 30-second ES footprint chart right now. Again, I know multiple people that trade NASDAQ, people trade gold, crude oil. You can use it on anything, and I think a lot of the same rules do apply across multiple different strategies. And again, I don't want anybody to get stuck on one thing in some way, because I've definitely shifted and thought things were right, thought things were wrong, but people make money in any way, and that's the beauty of the market. But really, to get into the footprint, again, what you're seeing here in the middle is just a normal candle,
Yep.
but where the magic of the footprint comes in is the individual orders.
Yeah.
So on the right side of this candle here, we are seeing active buyers, and on the left side of this candle, we are seeing active sellers.
Okay.
And then just kind of some highlights here. I do have it programmed. The one thing that's really nice about the footprint is looking at imbalances. So if you have significantly larger buyers, so we have 100 or larger buyers or 100 larger sellers, we have 100 sellers here, but only 10 buyers here. So that's highlighted. 20 buyers here, 5 sellers there. So again, I usually have it on a 4-to-1. So that kind of comes basic across all footprint charts. Those are kind of some of the tools. This footprint chart I'm using specifically is called the TDU footprint. They actually are having an Easter sale right now. I don't have an affiliate code or anything, but I highly recommend it. I did have some different footprint charting before, and it just didn't really have all the things that I wanted within it. So I highly recommend this one if anybody is actually interested in getting involved
I'll
with
get a
footprint.
code for you guys. Now, when you say active buyers and active sellers, since this is a footprint chart, these are filled buyers and filled sellers.
Yeah.
The order's already transacted, correct?
Exactly. And so that's a great point. So we're looking at market buyers, and so we're looking at the aggressive buyers.
Yeah.
And that will get into the strategy a little bit later and kind of the understanding of it. And so again, when we're talking about active buyers, again, I see if I can, you're hitting the buy market here. You're hitting the buy market. Again, we don't have any, actually, you're more there pulling the liquidity from the market. Exactly. So again, it's important in my mind to be able to see, who is the aggressive trader, if there's signs of an aggressive trader within the market. And that's what the footprint allows it. And that's where I think you can take advantage of finding, order flow in a way. One thing I do want to say is that you'll see zeros on the chart at the tops and the bottoms. It doesn't always occur, but when we're getting into active buyers and active sellers, when we get a zero on one side, that means there isn't an active buyer there. There's somebody selling, so there's 12 sellers down here, so there may be a limit order absorbing those orders. So again, doesn't mean there's an active buyer, but there might be some limit orders. So that's really, beneficial to see, because if you're starting to see a larger player absorbing those orders, that means there could be some sort of a pattern that you could start to recognize of maybe basing patterns or even topping patterns.
Hell yeah. Okay.
So I find that interesting. So I do want to build out this chart a little bit more. So this isn't how I view my chart specifically. And this is how hopefully it can be helpful. So again, the nice part about this TDU footprint, you can have multiple different, like, I guess, presets that they built. I don't use really any of them.
What's your main presets?
Yeah, their main presets. So I think we'll talk a little bit more is that within the footprint, we talk a lot about delta. Yep. So again, when we're looking at an individual candle, we can see the buyers and the sellers. Well, what's the difference between the buyer and the seller is the delta. Yep. So in this candle here, there's 110 more buyers, 76 more sellers. Again, that's a 34 delta. So there's 34 more active buyers. And then vice versa, you can see it on the other side. So I find delta to be a really important thing to look at. And to be honest, looking at it in like kind of a volume node way, it can showcase, for me, one thing that I'll probably say a lot is trapped buyers or trapped sellers. I know a lot of people use that in reference when they're looking at just charts and trading, but I don't really know how people can make that claim without looking at a footprint. Because, this is just kind of maybe going right off the cuff or getting a little bit more advanced right away. But if we have 90 sellers down here, but price is going higher, well, someone's screwed. Someone's getting stopped out. Those are where you're seeing those trapped sellers. And so again, this is getting, kind of to how I would trade footprint. These are high probability areas in my opinion. Again, when you're starting to use larger supply and demand, support and resistance, normal trading techniques, this allows for you to give maybe a little bit more confluence of maybe bottom forming or some sort of, top forming. Again, on the vice versa, it's like if you start seeing large amount of buyers, again, doesn't mean price is going to continue to go higher or lower. But again, if you're starting to see imbalances and price isn't going higher, it's like, well, there might be a larger seller keeping price down. So it's holding it down in a way. So I'm going to turn this off here and kind of get to how I have my footprint set up. So be kind of just a quick look. And so this is helpful, hopefully, for anybody if they end up, liking how I set up my chart in a way, and if they are wanting to use it. So I do like seeing volume as well too in a histogram way as well. Like to keep that neutral.
So what you're looking for is trapped buyers from looking at the delta, and then what are you entering short with the stop above the candle of the trapped
oftentimes
buyers?
Yes. Trapped buyers or trapped sellers. So and that's where we'll get into like setups where, and even kind of some of the color grading that I really enjoy. That I mean, I think it's helpful. I think the visual's helpful just because it actually. So one thing too, like just kind of just building out there real quick. Okay, and then value area off. So a little bit cleaner. So this is how my chart usually looks. So I'm looking at the delta here. The delta's, again, I don't like to see the extra number. I'm looking at the actual buyers and sellers. And then what's highlighted here, again, is imbalances. So, again, I like seeing the imbalances because if you're going to have a trapped buyer, okay, well, you have a large buyer up here that's indicated by the delta, but also you can see the imbalance as well, too. So that's like one thing how I like to have my chart set up. But we'll get into, I guess, how you start to look at these trades, actually. There's one more thing I need to change. One sec.
Yeah, and just to clarify, like Carter and I, we text each other during the day, and we're just texting each other setups, what we're seeing in the market. And it's really cool to see it actually play out in real time, just like 5, 10, 15 minutes later.
Yeah, exactly it is. So I'm starting out here. I'm going to go kind of like what I would do at the beginning of each of my days before I start trading. So I like using a 30-minute time frame, and kind of what I was speaking to is I like looking for supply and demand zones. Again, doesn't mean that it's different than support and resistance. Nothing is better or worse than that.
Price
I
needs
just
to
find
be a
this
zone.
to work.
You know, support and resistance, especially on an index like the S&P 500.
Yep.
It's not going to be a perfect number. It's usually going to
No,
be kind of a zone because big
exactly.
institutions and banks, they need that liquidity. It usually doesn't come from just one price.
Exactly. So, for example, I kind of started on the far left. So, one thing that was important on last Friday and actually the start of this trading week, we had a gap that opened up overnight.
Yep,
And I find gaps to be pretty important. And again, we kind of see we
definitely.
have, this basing candle, then a large move up. So, I kind of, I
Yep,
consider
love
that
it.
an important zone.
Yep.
So, again, I'm not trying to draw it up and be like, oh, look at price went to there. Yes,
No,
there
but
is a
we were
great
testing each
trend.
other that day, and we traded it off of that
Yeah, we
low. Do you
traded that
remember
gap.
that? The
Yeah, we
SPX
traded that gap.
board
So I was like,
with
gap fill coming. You're like, yeah, and you got it.
perfect.
Yeah, and this one here too, I kind of like this basing candle, large
Yep.
move candle to the upside. So
Rally
again, this is a
base.
larger zone.
Yep.
Again,
Rally
you can
base
see,
rally.
yeah, rally base rally, and then even in some case too, I would probably consider this
Okay.
just again
Yeah, a little
consider
market
just because
zone. Speed and
it's a
flow.
basing candle. Then you had a large rally upwards, and then
Yep.
really on the opposite side or the short side, I just don't really color my zones anyway. I just know if it price is heading in there,
Yeah.
just gotta
Oh
open
yeah.
the chart. But even again, there wasn't a trade right away in the morning, so again, I might
Yeah.
be
It's just an
pre-actively drawing
opening
this.
breakdown from the order
Yeah, this
flow.
opening breakdown, and so
Yep.
we'll actually talk about price actually coming back into the zone here. So
Yeah.
we'll kind of go to the footprint chart. We'll start out our day a little bit and just kind of scroll along a little bit. Let's get to okay. So we're already at looking at the bottom. That's our time. So we're on Monday here. So right away, we actually had a pretty large sell-off in the morning.
Definitely.
Again, I didn't have any setups or any zones, but again, what is indicative of sell-offs? What do we like about looking for sell-offs? And again, this is the candle. Again, we're seeing that price move down. We're seeing, again, large imbalances on the red side. Some of these zones here are called like triple stacked imbalances. Those
Okay.
are usually significant zones.
Triple
And
stack.
even here, too, again, we had price end up coming back up.
Yep.
See a
But
lot of
more
buyers here.
buyers.
Buyers getting trapped. They're trying to buy price back up after open and then slammed right back down. So you're seeing buyers over time kind of getting absorbed.
Yep.
So as price is moving, I forgot one thing I needed to turn on just because I was trying to build it out. My summary table here.
Oh, okay.
So sorry, that's probably a really important
Yeah,
part.
what's the summary
So
table? Tell me about that.
yeah, yeah. So you can customize it. You can have whatever you want. I just have volume here, so it's volume per candle and delta.
Okay.
So again, if you're expecting price to go down or if you want a significant move, you're seeing high volume, high delta. So the darker it's shaded, the higher it is based on the average of like the session at that point in time. Again, I like using delta because certain things should happen. For example, if a candle is moving upwards, if you see a green candle, you would expect positive delta.
Yeah.
When you start seeing these divergences, that also piques my interest. Again, we had a strong red candle down here, but we had 14 positive delta. And looking this on the footprint chart, you can see where those larger buyers are coming in, but getting just absolutely crushed by larger
Right
orders.
at that key area of supply too. It's right at like lower
Exactly.
high retracement on like Fibonacci. The
Yep.
confluence there is the point.
Exactly. Yeah. So going back to this 930, why potentially? I don't think I didn't take a trade off this one, and I'll kind of walk through. And so this is where using multiple different time frames, and again, I'm using a time-based chart. I've also used range charts in the past, but really what I want you to focus on is the Heikin-Ashi. And why I started using Heikin-Ashi just honestly really recently. It's found a lot more consistency in it. But one thing that's big to me is looking for structure. And so when we're talking about structure breaks, it's like, okay, we're making, we have some sort of a structure here on the top left. Okay, price broke this. Okay, instead of going from higher highs to higher lows, now you're breaking through those lows and making lower highs and continue down. But once that structure breaks, that's where you can look for the opportunity for some sort of a minor pullback, find some sort of trapped buyers or sellers who think price is going higher or lower, and fade them to the other side based off of using the footprint. So again, we identified the zone after the large morning sell-off. Price did pull back up into this and offered a pretty good opportunity to go short. But what I really like to look for is I like to look for some sort of a pullback, a retracement into the zone to show that, hey, structure was broken, and then have failure there. If we do look at 913, if you were an aggressive trader, you could totally take that. I think this is a strong move out of supply zone. You're
Yeah.
basing out having some sort of a consolidation.
The
If
first
we're looking
test
at
too of supply, so there's it's going to be a better rejection versus if it tests
exactly
multiple times, it might start to eat up some of those sell orders.
liquidity, yeah,
Yeah,
exactly. And
exactly.
I would say I'm more of now kind of looking at breakout and retest for those
Yeah,
opportunities. The reason being is that I want to see, and then I kind of wanted immediate.
yeah,
You could have got aggressive and been like, okay, we broke some sort of a structure up here.
yeah.
Price is
Pre-market
moving down.
lows, something like that.
Now you're getting to the bottom of this last structure that was broken. One of the perfect candles and multiple perfect candles here. You could have multiple entries, and I'll kind of talk about how I make my entries. But according to this, you've had your pullback here. You're seeing a large amount of buyers up here. I'm not seeing any imbalances. You're seeing a large buyer here. You're actually getting an imbalance. You could take a trade here if you wanted to, and for myself, I would probably put a stop about at the top there.
So
I know that's
a short once you see that those buyers weren't rewarded. It's from an area of supply, and I have a
yep,
tight risk to reward, right?
exactly, yeah.
Tight
And
risk, good
so
reward.
yeah, so for me personally, again, it's a little bit more volatile. So I trade micros. I
Yeah,
trade
me
on the
too.
micro. So I trade right now. I'm currently about trading 6 micros.
Okay. I trade about
The
3 micros.
ATR has been about 6 to 7 points on any given day. So I try to do a 1 to 1. But
Okay.
one thing that I really emphasize for myself is kind of getting my stop loss to break even pretty quickly.
Okay.
I know a lot of people might not agree with that until they hit TP1, but
But
I
the
will
thing
take a
is,
short.
you need to trade your account too, and also it's
Exactly.
different with Apex versus trading your
Yeah,
own futures account. Sorry, go back
exactly.
to what you were
So
saying.
yeah, so for me personally, my ATM strategy or my take profit stop loss strategy, I take my short. I usually sell at the ask or buy at the bid. I try
Me
to
too.
be a limit order, just
Yeah,
because
I don't like
sometimes with
doing
these,
markets. I've been
yeah,
scammed.
and especially in this market too, it's really thin. You could get some
Yeah,
pretty crappy fills.
yeah,
But anyways, take the short, stop loss. It doesn't. And one thing, this is going back to order flow, which I really like, is that this is a significant area of that I would be fine with me putting a stop loss. Again, it's kind of a shorter term pivot.
yeah,
Going back to here even too, it's like it's a shorter term pivot. You're not seeing it in real time, but like again, when you're looking at Heikinashi candles, one thing that I think is really important is looking at these doji candles,
yeah.
kind of these doji
Indecision.
candles. So like these candles can be big green or big red when you're looking at a norm. I hope this doesn't shift my little chart. Oh crap, it might have.
Oh, that's fine. You can just put
Um,
Heikinashi back. What I also like about Heikinashi is that it really smooths out the trend. Like if you're gonna
yeah, and so
ride the
basically it's
winner, like Heikinashi's your friend.
yeah, and so that's what I think that's why I've been using the Heikinashi, because it's like again you can have large green or large red candles, but like if it's not within the trend, it's like an indecision candle, which
Yeah,
for me is really beneficial because then I'm like, okay, if this is an indecision candle and
risk
we're trading in
behind it.
supply or trading in some sort of a demand zone, to me potentially that's where our opportunity is to get long, get short, look for some sort of a rejection or something, and
Yeah,
looking at the order flow. So again, sorry, yeah, going to the right here, it's like you're seeing these doji candles form here. It's like, and we've already had a strong move out.
yeah,
Again, if I like for me, I'm not that aggressive of a trader, but like again, you had an opportunity to get short here. Really, the home run. Again, it's a really big candle, so your risk would be pretty high.
yeah.
I don't know if you want to take this
But
short,
the
but
but
you
the
could take a
probability is higher. So your risk is higher,
yeah.
but your probability is higher just because of everything we've discussed.
Exactly.
Yeah,
If you ended up waiting for the close of the candle and you got, or maybe waited for some sort of a large sell and bounce and you got short, like what's really strong about this candle is that we have a large wick. I really like the wick in the candles. I like large wicks,
yeah,
and then probably to sell it off. Again, and it's a very small imbalance here, but it's still a buy imbalance, and then kind of even falling up here too, like a lot of buyers, and then you even kind of see the fall off of buying at the top here
yeah.
versus initially we had a lot more buyers here,
They're
and then
getting
even
tighter.
sellers be willing to sell it lower. So
Yeah,
you got short here. I mean, again, with me using my 3 point stop loss rule, it's like I could get out and be able to at least potentially get a 1 to 1 risk to reward on that with a runner. Again,
yeah,
market ended up bottoming going up, but I thought that was a pretty good opportunity to kind of like if you were an aggressive trader in that
definitely.
aspect. Again, price ended up retesting his zone. So again, we kind of spoke to if it gets weaker and weaker, if the tests become worse and worse. or more and more, then it's not as significant by any mean. So
Yeah, because those
again,
orders get eaten up if it keeps
orders
kind
get
of ticking
absorbed, but
over.
again, the higher the price goes. So again, I'm looking for a price to form some sort of structure. So okay, like one thing, I wasn't looking for shorts once price came back up here because we had
Yeah,
some sort of a structure here, or
same.
actually we had some sort of structure here
Yep.
after the rally pulled back, broke higher.
Yeah,
So I'm
where
like,
the
okay,
candle
price could,
breaks above. All right, we
yep,
broke the
and
indecision bull. Let's let it ride for
yep.
now.
Exactly. And so then once price came back up here, I'm kind of drawing this black line. I'm like, okay, I would need to see a break of this low here and then a retest for me to consider going short. Here, break of that low, again. And then we ended up kind of getting that here. So I'll kind of go to this 946 time. There actually wasn't any, for me personally, like looking back on it, like I don't really think I didn't take a trade on this, but
You can still learn
I
from
think
it though.
there wasn't really anything significant. So like, again, we had like 943 again that we were still making that break down here. So this is the low we were breaking on the left here. When we pulled back into it, like there really wasn't anything that was telling me to short. There wasn't really any buyer imbalances. We actually ended up getting like trapped sellers down here. So like kind of just watching the footprint a little bit. I was
Yeah,
like,
and
oh,
notice
like
price rallies after those sellers get trapped.
yeah, exactly. So and then again, I'm like kind of sitting there. I'm like, it wasn't a significant like, oh whoopsies, but it wasn't a significant push down by any means, and we kind of really didn't break the low that much. Here, for example, again, so throughout the day, honestly, it wasn't the best setup until we got this pullback
Yeah,
all the way down to
demand.
here, demand.
Yep.
So again, this is the gap fill. So this is where the opportunity was, in my opinion. Again, heading
Nice.
down here.
This is where we're selling SPX
This is where
options premium too.
exactly,
Yeah.
exactly. So for me, again, this is a large candle down, but we have this structure here ends up getting broken, and then I'm kind of like drawing a zone. So like this is a large kind of candle zone here of like I want to see price pull back into like this larger zone, and this is where I'm then looking for footprint
It's
setups.
a good location.
So yeah, so it kind of got my location again. If we ended up breaking lower here, then I'm like, okay, then structure is going lower. But we had a larger zone here.
Yeah,
It was a larger zone. I wasn't.
Do you set your stop just outside the zone, or are you going just
No,
underneath the wick of that
I'm
candle?
going on. I'm going on the candle. I'm using
Okay.
the entry because then for me, then I think that price could end up reversing and heading lower in a way.
Yeah, that's
I
true.
just and then you'll see on this candle real quick. Like again, I try to be true to what I'm trading and what I'm saying of like what I'm
Oh
taking
yeah,
trades
no,
on.
definitely. The
I
markets
like
are
I like the
fluid.
long wicks.
The
So
market's
again,
fluid.
so 1120 here. So we just kind of breaking it back down. I'll flip back if I have to the trading view if you want me to, but we had the structure here.
Yep.
We broke up above it, and now we're pulling back. And so again, I kind of drew that larger zone again. Um,
Yeah, back over there.
Here, again, we broke out here, and like this is a pretty large candle. We had a base and a very aggressive move out.
Yeah.
So for me, I'm like, I want to
Oh.
see if price comes back down. I want to see those buyers defend that zone.
Yeah.
So let's
You
see
want
what
them to
happens.
form like a higher low pivot, maybe like an inverted head
Exactly.
and shoulders type of deal.
And it makes sense to me too, like looking back on it, like this is this kind of footprint in general too, like being able to program this into the software, which is in there. It's like, why is this yellow? Why is this line drawn out? Well, these are large sell imbalances at the bottom of a candle, and a candle moved up. So this is like kind of like a significant zone here
Yeah.
that price moved very quickly through, and then like sellers were trapped right away on that candle,
Right away.
and also met on the other side too with larger buyers as well too on that candle before.
And the
So
buyers are getting rewarded this time, so we're getting that confluence that price is likely
exactly.
to go up.
And so now price is pulling back, and now we're observing this zone. So you could get aggressive. I personally wouldn't have taken this right away, but you would have been rewarded. It would have taken a second.
Yeah.
Again, price moved down strong. We're getting a lot of strong selling balances in the candle before. Price is still selling strong down here. Then we get a strong move up. We're getting large buying balances. If you got long here, and again, this is a larger stop. Like I don't know if I would want to be taking a 10-point stop on this
Do you
candle,
ever
like
kind
off
of
of the
build
first.
into your trade? So let's say you have a bad location on your long. You know it's going to be a wide stop. Do you ever kind of build a little bit into it, keeping your stop the same? Because sometimes
Yeah,
I'll
well,
take that aggressive trade, buy like one micro, but then
but
I'll buy another micro if it drops a little bit, keep the
yeah,
same
I
stop.
mean that's where I haven't usually have the ATR pulled up on the chart, so I'm
Okay.
kind of adjusting contract size. So like for me, like I'm not trying to lose more than like $200 per trade. So
Okay.
like
Okay.
I have a TP1 and a TP2, so if it ends up being like, I have to take four micros, and I take four micros,
Yeah,
So
and then you really can't build into it because that's about it. That's your clip
yeah,
right there.
exactly. So I kind of, I'll be willing to set a wider stop on that as well too. But yeah, but anyways, like you would be rewarded. But where the candle that I entered on, what I really liked about it, again, long wick candle,
Yeah.
trapped buyer right here, and then we even saw an aggressive buyers at the top. In again, and this is this kind of building on it. We made a low, and we never got really back down there. There was trap sellers, and then even looking down here, you're even seeing volume fall off. Like
Yeah,
people
it's just
weren't interested
nothing.
in trade.
It's so thin.
Pe- yeah, people weren't interested in trading anymore. So you're able to get long and have a pretty long wick candle. And then if we're going back to that chart, like, you ran, 10, 15, 20 points. Again,
Yeah,
I didn't capture that whole move.
still does.
I did have but that's a perfect trade setup.
Yeah.
And once price ends up coming back down, we kind of build structure. It looks like we're breaking some structure. Again, I didn't have any other trade setups there on that specific time. But I think, yeah, price ended up even coming back up as well too.
Yeah, that
So
was
we
a good
bounced and
rally. Think about it. That's like a 2 hour rally right there.
yeah, and then
Right
let's
back to
see, we're
supply.
up in the trade. Yeah, but yeah, right back. And then so I can't remember if there was any setups here. Yeah, actually, we had a pretty good setup here. So, um,
High wave
I would
candle.
consider this structure a little
Yep.
bit just because it's like kind of basing candles and up. So we ended up breaking here. Again, we're looking at the top left here. So we're going back. We're retest. There's a lot of opportunity
Yeah.
today.
Extended into
Breaking down and
supply.
then kind of have these large candles here. So you're looking for this zone. Again, we'll get back to the footprint around 2 o'clock there. So you kind of see, like, again, we're looking at it in retrospect, but what I'm trying to really emphasize is like looking at the footprint candle to confirm or deny it. And it's like again, like you can, I don't like to take trades out of like my zones and stuff,
Yeah.
but again, like
Because there's not
here,
enough
like
meat on the bone if you trade
large
outside your
large
zone.
buyer imbalance met with no active sellers and then no follow through. It's like, and then you just have price wash out. Like there's people out there that will sit and take trades like that.
Mm-hmm.
I just find that I just can't do high probability trades like that. Sorry, I'm just kind
And
of
that's totally fine. Trading's personal, and if it's
yeah,
working for you, stick with it. That's like the main thing. If something's not
exactly, yeah,
working for you though, consider adapting just a little bit. Sometimes it could just be the market environment. It could just be
yeah.
the way the VIX is moving a certain day. But
No, and I totally agree. I mean, like I've had to adapt. I mean, I've been back and forth sim trading and not. Sorry, I was trying to check my time on where we were at on this one here. So okay, yep. So anyways, yeah, like I've had to adapt my trading so many times.
me too.
Even this market environment, like that's the thing, like your stops are so much wider
I
here.
know.
Um
It's
which is a
wild.
little bit hard. Again, like
Hmm.
you're taking some huge like these are 30-second candles and you're getting 5-10 points. Like that's crazy. Like that
I
doesn't
know.
happen. But
Market's
anyways, so,
moving like in a range of like 2 to 3% a day.
yeah,
Some days
it's
5 to 6% in just the
yeah,
past
you're
few
getting
days.
you're getting the volatility, so get
Yeah.
used to it. But yeah, so again, so we drove back up to supply. I mean, again, if you're a genius, if you're a great footprint trader, like like one thing that'd be great. I really want to somehow get better into holding runners, but
Me
like
too.
take it, from zone to zone. Like that would have
Yeah.
been a perfect zone to zone trade,
Yeah.
and then you could
Seriously.
even take it back down to that same zone. But
Just move it
um,
in all directions.
exactly. So again, having structure here broke up. Price ended up breaking down through here, and now we're kind of looking for where do we want price to pull back again. I kind of try like the initiation of the zone. So even looking at the top right, I would kind of be looking at like 4 5, like
54.75.
5 4 75
That's the
to like
short, and then stop 54.80.
not 54.80. It'd be actually just the top of the candle, like
Oh,
top of the candle that I would
that's a
take the
nice
trade
tight
on.
stop.
It's a tight
54.78.
stop, yeah,
Yeah,
exactly.
that's
So
good.
again, like so if we're looking at it here, for example, just because the Heikinashis look different based on volatility. It looks a
Yeah,
little bit
that's
different
true.
here on
That's
the
true.
30-second chart. But again, so price pulled back. So this was an interesting zone to take trades in and out of because you could have got aggressive or not gotten aggressive. Um, like I could see people taking a trade here. I had this, so this is highlighted here as pink. This is like a bearish point of control.
Okay. Bearish
So
one
like
goes
more
here.
volume is conducted on the top third of the candle with like volume like that. So people could take that. That's not something I take. But again, like you're seeing like a lot of buyers getting trapped up here. Like 50, like that's a pretty solid amount of buyers getting trapped up there.
Yeah, I'd say
If you
so.
did take that trade, like yeah, like you would have like for me personally, like you would have got your stop loss to break even pretty quick and maybe even hit like a 5 point, pretty
Yeah,
quickly there.
you
And
could
even
make
that kind of
two
even
off
held
out of
for a
that.
long, yeah, it kind of held. And then like again, this would probably been a, like even though it wasn't to that zone yet, I would probably have potentially taken this trade here. Again, trap buyers up here. Again, it wasn't really a significant amount of volume, but I probably still would have thought like, hey, this is a pretty good spot to try to take a stab here.
Hmm.
Would have got short. Again, still would have got my 3 points, and stop loss would have moved to break even. And really up to me if I wanted to manage the trade even more from there. But again, you could take a stab there, but your risk is really tight.
Definitely, I like
74,
that a
so you're
lot.
risking about 2-3 points there. But here's like probably the best stab. Again, very similar. You know, trap buyers up here, long wickier candle, took a short here. Again, price ended up falling a lot more from there.
Yeah, you got the
So
purple,
exactly,
bearish
and
volume
purple.
control as well.
So yeah, and that's a nice thing about this footprint is that like it's programmable and to put it in there versus my other one was like kind of like how to like consistent like I could see the imbalances, I just couldn't see delta. I couldn't highlight like bearish or bullish put in control or anything like that, and price would move like that. So and then there specifically like that ended up starting that downtrend back down. Again, if there's some opportunities of pullbacks here, if you like were late on the entry, again I don't try to take it, but ended up
Yeah,
providing some pretty good setups like multiple scalps here
yeah,
with
yeah,
really
yeah.
tight risk and then actually a one larger bigger trade. So again, I draw these zones. Ideally, I want to see price get back to there. But if you're starting to if you're starting to see, kind of that order flow setup, you're seeing those, trap buyers and trap sellers. That's where you can take those trades there, in my opinion.
Definitely. What would
So
you say
that
is
was
like
Monday.
what would you say is like your average like hold time for a trade? Like
Yeah, it's probably like
minutes?
honestly like 3 to 5 minutes. It's not
Okay, yeah.
long. It's not a
Three to five
long
minutes.
trade at
That's what I was
all.
thinking. Yeah.
Yeah,
And
it's pretty short. Again, like ideally, like sometimes you get really quick liquidity candles down or up, but again,
yeah,
like I'm really just looking for really quick trades.
definitely.
But they were provided
Mostly getting
multiple
your target, right?
opportunities.
Mostly just getting your
Yeah,
points in. So and you're not
exactly,
totally dependent on time.
exactly, yeah, and like they provided so many opportunities in this again. So like one thing that was super nice about these opportunities here is that like we had multiple kind of pop ups and then breaks another structure, pullbacks to previous areas. So like you could have shorted this multiple times. Again, I probably once we started breaking higher here, I would have not looked as short. But again, if you were aggressive and saw that you wanted to take another short there based off of the order flow, like
Yeah,
you could have done great multiple times just
definitely.
trading. Yeah. But again, like I think it's really important for me to draw those zones because I think it's really beneficial to kind of have an area that you're willing to trade in and out of and keep
Yeah.
yourself away from the middle.
Yeah.
Um,
Don't diddle in the middle.
don't diddle in the middle. I think that's like a
It's like
Brian
a
Shannon CMT thing,
yeah.
which is amazing. But yeah, so I'd be totally fine to keep walking more other examples unless you want to go some more. I have some from
Show me
Thursday that
another
I really
example.
liked.
Show me another
What?
example.
Yeah, let's go. Okay, so yeah, Thursday was another day. Thursday was where I was really kind of hitting it hard. I had a really great time on Thursday.
Thursday was the day Jerome Powell was talking about stagflation and how he didn't know the impact of the Trump tariffs on the
Yeah,
overall market.
exactly,
And so there's a
exactly.
lot of volatility on Thursday.
Tons of volatility. So again, we're starting out by drawing our zones here. So again, like this was a basing area overnight, pretty strong move up. Here even the day before.
Yep.
So again, we're just looking for price to come back into a zone, and then like the whole thing is like I want to see structure break. Like I just don't want to go take trades on the first time, even though yes, it could set up. I want to see a structure break. I want to see a pullback, and then order flow to tell me to go short or long. I consider this zone right
Definitely
here.
supply right there. You can see it with the
Yeah,
upper wicks too, like because wicks are just
yeah.
indicative of supply.
I'm totally fine with multiple tests, but once we start seeing like breakthroughs and stuff, like
Yeah.
here, like this was like one where like this zone would get like drawn, like taken out after, but
Yep.
it actually ended up probably turning into demand, which was fine. Okay, so pretty good. I think we're good for right
So
now, and then we'll
Thursday
go
was
to the chart.
the day after Jerome Powell was speaking.
Yeah, that was
Thursday was
right.
the day
Thursday, yeah.
of
So
the
Wednesday was
Fed
the day
meeting.
with
Yeah.
all the stagflation talk, which I mean, market environment stuff. I'm gonna be honest, like I'm a total believer in that. Looking at commodity prices and just kind of like one thing about the CMT again, like CMT is not teaching you footprint stuff at all, but they're
No,
teaching
no,
you how
no.
to manage money. They're
Yeah,
teaching you
yeah.
how to
They're
manage
teaching you how
money
to
for the long
manage
term.
money, asset allocation, longer term swing trades, longer term investments. This is the good stuff that gets you that cash flow day to day, though.
Exactly.
Yeah.
Like how can like for me like the way I look at it's like how can I have a non-correlated trading strategy? I don't even where did the market end up? So I got to scroll all the way down here.
I completely
Um,
agree. Like futures trading, it's completely non-correlated to the swing trades. As long as you
yeah, it's a
don't
non
let your swing trades kind of like affect your intraday trading mentally. Like if I have a ton of short positions on swings and I see some buy setups on futures, sometimes I might not size up on the buy setups when I really should, or I might
yeah.
try to hedge a little bit with futures. But really just dissociating and having that uncorrelated income stream is really
Yeah,
good.
there's not uncorrelated income and like that's the thing it's like when I'm talking about like like people are like see me trading or I talk about trading they're like, "Oh, like what do you think's going to happen?" Like, well, I'm like honestly like I don't care what happens. Like
Yeah.
I'm
Just
trying to figure out if
reacting.
I can make money to the upside or to the downside.
Yep.
It's like it doesn't matter to me which way the market goes.
I
So,
like that.
okay. Get right into it. So, try to go back to Thursday at 8:30. We're looking at right here.
Mm-hmm.
Price pushed down right away and we had this overnight
Demand. Yep.
demand zone.
That
So,
pushed
we're
it
looking
up
at
and
it
then we
right
just
here.
crapped it.
Yep. See, okay. Again, the setup that I like. Okay, we're making lows. We're going lower. That's totally fine.
Yeah.
There's some sort of structure here. Why is it structured? It's kind of highs. We
Yeah.
end up breaking up highs there. Okay, now let's look for price to pull back.
Yep.
Again,
We
this is a
see
pretty
those lower
larger,
wicks too.
kind of larger candle zone. I would probably say, yeah, like even like I try to look at the 30-second candle too. Like if it's like a bigger candle, just to kind of like, okay, like, somewhere around here. Like, again, you want to see it basically pulling back. So 8:45.
I like that.
Yep, 8:45 here. So again, same thing. You're in demand here. We end up getting a strong push up here. And again, like there was opportunity like as a first buyer if you wanted to. Again, you had like, some buyer imbalances here that were bought up and you had the long wick. There wasn't really any seller imbalances like in this candle, but you could see trap sellers and even this huge.
Yeah.
They call
That's
this
big.
the so there's a guy that I follow and he calls this the unicorn. So
Unicorn.
it's just like a
Okay.
long nose, a long nose.
That's
And
funny.
so, yeah, he calls it a unicorn. So it's like somebody stuck there, like the Pinocchio, some liars there, So price ended up going back up, and then price ended up coming down here. So again, we're looking for it to kind of enter that zone. And so let's see. I don't know if there was actually. Oh, there was a trade setup. I just like don't know if I would have been confident to take it, to be honest. We're back in
Why,
this zone right.
why would you not be confident just because we're in demand and it's kind of a bit extended, maybe?
It's in demand, but it's in demand and it's in where I want it to be. But like, what's a little concern is like, I like seeing the strong, long wiki candles, and like,
Yeah.
even though this sets up right here, like, I mean, I probably would have ended up taking this. I know I didn't that day, and I was kind of mad at myself. But like, strong wiki candle like wasn't it? But there's a bunch of trap sellers down here. The blue indicates bullish point of control.
Okay.
Like you could have got long there. I probably would have ended up getting long over here, and probably I think I might have ended up getting stopped out a little bit here. I can't remember what the ATR was on it or anything like that.
Yeah.
But you had the setup here.
Yeah.
It's just depending if you want to be aggressive or not on it.
Sometimes it's also just intuition, being in the market for 9 years, you sometimes build an intuition.
Yeah, you build intuition on it.
Yeah.
So, but like honestly, looking at it, like yeah, I probably should have been fine taking a trade here. Should have been fine. And even too, like again, negative delta, green
Yeah.
candle,
Negative
delta divergence.
delta.
That's a solid setup. That's a solid
Well,
setup.
you'll catch it next time. No
Yep,
regrets. You just catch
exactly.
it
And
next time.
so yeah, price ended up basing out or coming back, and then price ended up actually coming back up, and so we actually ended up, in my opinion, making new supply
Okay.
here. So looking at the candle open and the price that ended up actually, price ended up ripping a lot lower. We ended up launching pretty far from up there. Price made a huge shoot down, and we're starting to look up here on the top right at 10 a.m. We're in supply now. We're looking for the structure, the shorter term structure here that's being built. to be broken. It gets broken, and then we start looking for some sort of a pullback. And then here's like a really close candle, which was nice, but it was right here because we ended up breaking down here. I don't know if I'm over on the 30-second here. Sorry. We ended up breaking down here and had a very quick pullback to kind of like this zone here.
Yep.
That 5326 to like that 530 zone.
Yep.
You seeing that there a little bit? Yeah. Because even though it was a minor break of structure, it's still a break in supply. And then again, going to our charts here, over to 10 o'clock. It's only problem using 30-second charts. It's like so much data that has to get loaded up.
Oh, that's fine though.
Yeah.
And this is the playback feature, right?
Yeah, I mean, playback's your best friend.
It's so amazing. I've done hundreds of hours on playback.
Yeah.
Just practicing.
So yeah, so we had that breakdown. So again, if you're an aggressive trader, like, and you wanted to get short up here, I mean, this is a little bit different. There's a large seller that was up here that came in and sold, and price ended up coming down.
Bearish point of control, that purple candle.
Exactly, bearish point of control. And then we had this, kind of a little bit of a pullback up here. This is that pullback we were talking about, kind of like right here. Was looking for opportunities to get short there, just didn't get it. I don't think I did. Yeah, there wasn't really an opportunity.
Consolidated in a tight range for a while.
Yep. Consolidated here. Price broke back down. And this is where we ended up getting some opportunity.
Yeah, when volatility starts to expand, when the ATR
volatility expanded, we ended up breaking structure lower. Again, we're still in the supply zone, so new structure was broken lower. And we ended up coming right back up into that area that we broke down from.
Yep.
And this is where we ended up catching a pretty small scalp, actually. So again, we had this price move back down. Price came back up here. Again, I think I was just getting impatient, to be honest. And ended up taking
the time of the day when you're trading. So for example, during like the lunch period, I notice it tends to get more choppy. I'm not going to trade futures during lunch.
I would say I definitely do, but usually I try to trade from like 8:45. So I usually let the first 15 minutes, not trade, and I usually don't trade in the first 15 or the last 15. Okay. And then usually between 11:30 Central till about like almost 1. Okay. I don't trade. But like right now you're getting a lot of opportunity, but like normally, you're getting barcode time, just back and forth, which isn't fun.
And I noticed that even on like holiday trading, like even on Thursday, the market was starting to barcode. And it's
it was. So we got into like, so I was gonna say I'll kind of talk about, because we ended up getting into some barcode time, and I like ended up like stopped. So like anyways, I think I ended up taking a short here around 10:32. Yep, like was able to, whether I was looking at the ATR, just a candle again. I didn't have like the trapped buyers. I didn't have like an indication of an imbalance, but again, bearish POC, again, kind of just like a larger, you're seeing larger blue up here.
Yeah. And
I was like, okay. And so I had to hold it for some time, but I ended up hitting my 3 points. I think I ended up taking 5 and stopped out for the rest, not break even.
I love it.
And then price actually ended up shooting back up pretty strongly. And so then I wasn't looking for shorts again. But again, if you're aggressive, you could probably take in a short there. But again, to my opinion, we did make a pivot down, and then we're now breaking structure higher. But we were provided with opportunity again. So this new red candle here, price broke through. Let's look for opportunity, kind of in the zone of 5324 to, 5329 to get short around 1045. So again, even looking at that, you're kind of getting that breakdown, and you're kind of coming back up into that bottom of that, previous zone there that was structure before. So we go to 1049 or 1045, whatever that time was. So again, you could have taken multiple entries here. So this is this push back up here to this zone. Could have got short here if you wanted to. Again, you're seeing some trap buyers up here but it's not indicating imbalances by any means. Bearish POC, but kind of larger here. But I think something that was really important to see was that you got large seller imbalances coming in at the bottom of the candle, showcasing aggression down here.
Yeah, they're like,
but really
this candle, we're going lower.
Yeah, but really, if you waited and didn't want to take that, it would have been a larger risk, but you'd have taken a short probably on this one. Again, large red candle, multiple sell imbalances, but again, the bread and butter, that trapped buyer there, that larger buy imbalance. And again, like you would have gotten your points, got a decent amount there, would have been a good scalp. And then if you're still holding, like you probably could have got out earlier because then like you're seeing kind of the reverse of the order flow. Like
Yep.
large sellers, bullish POC.
And your trade's in profits at that point. If you start to see some
Yeah,
reversals,
you're out. You're
it's
out at
easy.
break even or anything
It's
like
easy to
that.
hop out.
Yeah, and then basically we tested that zone so many times. I was like, I'm not interested in this anymore. So I think I ended up deleting the zone here real quick. And then price actually ended up driving higher up to like 11:30 here. I didn't have any opportunity here. I ended up getting a pretty good trade here, actually at 12:03.
You kind of also breaking that like higher low support. Like, if you're just
Exactly.
kind of like looking at that on a smaller time
Exactly.
frame.
I mean, that's what it is. Like, I mean, that's the thing. It's like you can trade in multiple ways. I just think the order flow just helps with the entry. But it's like you had this short, you had this small down candle, the push up, the break down, the pop back up into that zone
Yeah.
right there. Again, I think I ended up taking one at 12:05 and 12:09. Yeah, this is actually a great example here. This can be the last example. I mean, I don't know if I'm helping or
No,
I think
definitely
it's
are. This is amazing. This is
yeah.
this is a footprint masterclass right now.
Yeah, I mean, it's just showing a lot of examples, and I think the biggest thing is like you're seeing a lot of stuff pop up like as I'm scrolling through. It's just like drawing these zones doesn't just allows for you not to just like take dumb trades, in my opinion.
Definitely, definitely. We want to avoid the stupid trades.
Yeah.
Trading's hard.
So
Let's put the
which is hard.
probabilities in our favor.
Yeah. So again, we're looking back, referring back to the zone here that we're looking at around noon. Again, this was supply from overnight. If you're looking back around that 3 a.m., which was tested at like 6 or 7, and then now we're back up there again. Even later in the day, it was tested again and held pretty true. But anyways, going back to it again, we kind of broke down. Again, we're kind of referencing a zone here. You could draw the zone of this previous range. So price broke down. I know I got aggressive on a short here, which got me my 3 points and a little bit more, I think. Got short here, large buyer up here, buying balance. I took the short, got my 3 points pretty quickly, stopped out for the rest. But the money trade of the day was this here. Again, large buyers, buy and balance, seller and balance came through. Boom.
Good fall.
Might have got 3 points, might have got stopped out again, re-entered. Buying balances, boom again.
There's that
so
wick too on that candle.
yeah, in the wick. Yep. Again, it's all I really like trading the wicks. So I think like that's probably one thing I want to be better at for myself is I've been noticing the higher probability trades have been the wickier candles.
And even just talking out loud about it will put it at the forefront of your mind. And so when you see it in real time, be like, oh, this is a higher probability setup. Maybe instead of 4 micros or 6 micros, you take like 8 micros.
Exactly, and that's where I'd like to build some profit in the sim, and would like to put some once I kind of get some good confidence and some consistent results, really kind of go for it.
Talk more about that because a lot of people they just kind of just trade right away, but you do a lot of back testing, you do a lot of simulated trading to kind
of I'm on the sim trading, so I mean I was trading, so I mean to be blunt, I was using Apex and stuff, and then I was. Like I was saying, I was kind of gaming the system, and Apex ended up banning me from buying evals, which really sucked.
Yeah.
There's a bunch of people out there. I don't know if there's anybody in your community, but I mean, I was flipping accounts like crazy, but that was able to get me a huge payout, and hence a real change. So I was part of that group of people, which is unfortunate because I love Apex. Honestly, Apex is great, and I would totally wish, but. I've tried to I've used my funded futures. Tradeify I think is pretty good as well too.
What do you think about Top Step and stuff like that?
Yeah, Top Step is good too. It's just so much cheaper. Tradeify, it's $97 for 50k eval with no activation. Same with my funded futures too. And cool. For my funded futures, once you hit $1,200, you can pull out all of that right away. If you wanted to.
And that's
so I think some of those
3 or 4 trading days if you're trading small. And
exactly, yeah. And I think the biggest thing too is rotating accounts and stuff. If you have 3 or 4 accounts, that's really all you need. I mean, if you get more than that, use a copy trader. But it's if you take a loss in an account, okay, rotate and then get out. Don't blow accounts. Trying to do the same thing over and over again. So that's the longevity of it.
Trade futures on your regular brokerage accounts. Sometimes I'll take just a MGC trade on Thinkorswim or
I've done that. Yeah, I've done that through my Schwab account. just kind of just like
Doesn't
at the
matter
market
though.
and
That's
stuff.
the
It's just
thing.
yeah, it's like a micro trade. I'm like, this is just so weird. It's like archaic to do it on there. So I'm just like, I
Yeah.
don't even do it through like the brokerage. So it's like, but
Yeah.
anyways, yeah, I mean like, using like the prop firm space is like I think is an amazing opportunity for a lot of people. But
Definitely.
I think yeah, like that's the thing is like I blew up some accounts and stuff at the beginning of the year,
Oh yeah.
and
Me
I
too.
kind of understood like volatility was changing,
Yep.
and like I was just like okay, like I got to take a step back here and like kind of like rethink how I'm going to trade. And it's not
Yeah.
because I was like, oh, this is a different market because of whatever. It's just like like what I was doing before, I was really wasn't having much success,
Okay.
to be honest. But I was still
Yeah.
using footprint. I just like needed to kind of take a step back, but I've really found consistency in the last kind of month and a half or two, but like really, really honing in for sure in the last month by finding some really good setups and kind of just continue to dive more and more in the footprint and like joining different communities, like looking at
Yeah.
different Twitter feeds and just trying to absorb as much information as possible on footprint and order flow in general.
Me too. And the more that you study, the more that you immerse yourself in this subject, and the more that you teach, the better the trader that you become. So it all
Exactly.
stacks together. It creates synergy.
Yeah, it's like I live in a house with some other guys that work in finance, but they have like no
Okay.
interest in futures or anything like that or trading, which is like totally fine and stuff. But
Yeah.
it's like there's really rare opportunities to like speak about this because
Yeah.
it is so niche. It is a small yet big community. But like
Mm-hmm.
even like footprint and stuff, like there's traders, but then there's like the footprint traders. Like that's a smaller circle, but
Yeah. There's
I think
so
it's
many.
something that like there's an edge to. Like I think this could help out a lot of
Yeah.
people,
You need to
in my
get some
opinion.
alpha.
Exactly. It's like I see all the time a lot on like, Twitter, like people use ICT and all that stuff. And it's like, okay, use ICT and then like add a footprint chart to
Yeah.
it. Like,
Exactly.
I
Just
think it would up your win rate by so much. It's like, there's some people I follow who use like supply and demand, support and resistance. And I'm like, you follow the same strategies of, okay, you get a break of structure, you pull back into the zone, you see rejection, you take the trade. It's like, it's all a lot of it's the same concepts. It's just like, I think the footprint gives you a better edge by actually
yeah.
looking at
It's
what's
like a
occurring.
filter. It filters out the bad and helps you identify the good within your
Yeah,
setups.
exactly, and yeah, and so that's the way I'm viewing it. And but the thing is, like working in the markets, trading, whatever it is, it's it's a great opportunity to learn about stuff every single day, and the world's ever changing. It's I think that's the
Yeah.
greatest part about it as well too.
Definitely. Tell me what do you currently do for like your job? You were telling me that you just got a new job. Tell me
Yeah,
about
yeah.
that.
So I work at a
What are you
wealth
doing?
management firm, and I work on their investment committee slash their trading team. So I do most of the day to day trading, but it isn't like anything like day trading or anything like
Yeah.
that. It's long term investment management.
Yep.
Oftentimes, I really work with the financial advisors at our firm to help build their client portfolios, kind of answer market questions, and again, speaking about making videos and trading, I like I make internal videos, kind of showcasing markets from the technical approach. So,
Yep.
using the charts, using technical analysis to really paint a picture of longer term trends that are going on. And this might be a good transition to go into that. But,
Yeah. Do you want to
you know,
share your screen and just go over
yeah,
like what a typical video that you might make?
yeah, for sure. So
And I can
I got to
also give
switch
my
it.
thoughts and share what I use as
Yeah.
well, what I use differently.
Yeah, so usually, I mean, like for me, like I kind of start off with like an economic, kind of economic view, like what's going on with the data and everything like that. With like, what's some news that's going on in the world?
Yeah.
Should we be paying attention to, CPI this week? Should we be paying attention to whatever it may be?
Geopolitics, non-farm
I don't know if I
payrolls.
actually have it logged in here. But so usually I initially start off here by kind of looking at the S&P 500
The weekly,
and
right? This is
kind of having
weekly.
a blank chart and using really basic, trend lines. Okay,
Yep.
like hey, like clearly like we're in a long like
Oh yeah.
longer term uptrend, like
Yeah.
drawing trend lines and stuff like
Yeah.
that for longer
Connecting
term
points.
uptrends.
Get as many points connected as you can.
Yeah, exactly. Like kind of being like just showcasing the bigger picture. So the last couple weeks has been really important because prices broken down. We're seeing rollover in our our momentum indicators.
Yep.
But on a technical speaking, it's like we're testing old
Yep.
2021, 2022 highs, and even kind of that technical point as well too. So
Yep.
again, oftentimes, sometimes I'll make recommendations to speed up Roth conversions or dollar cost averaging just based on technical levels or even just like spots in the market. One thing like I like to use a lot of times is using the VIX.
Definitely.
My biggest thing is like there's this random blue line I have here. It's kind of like my extreme point or my add point. It's like over periods of times when you kind of get above that extreme level, it's like, risk adjusted returns looking forward. It's like not a bad time to buy into the
Yeah,
market
VIX tends to
when VIX
mean
is spiking.
revert.
Yeah,
Yeah, especially over that 30 level. VIX doesn't like to hold above
exactly.
30 for a long period of time.
Yeah. So oftentimes, like, I'm not going out there and like, I try to use sentiment in a way too. But my
Yeah.
biggest thing that I've been trying to build a picture on is longer term trends using relative analysis. So one of my favorite things to do is that you take a security, and this is
Ratio
just one I
grids.
use. I do international versus
Yep.
S&P
Take a
500.
ratio. You can see that.
Yep.
Yep, the international's been in rotation lately. You can see
Yep.
that on the
Exactly.
Germany chart, Japan's chart.
Yep. Exactly. But this is showing longer term trends of S&P 500 versus international. So kind of showcasing to advisors like, hey, like if you're making movements, like for me, like this is one thing that's really interesting, and like I'd be interested to hear your thoughts on it. But like, we're coming up and testing this trend line again, and it always seems like international like starts to boom. You test the trend line, and then you get smacked back down.
Yeah.
So is this going to break out? Like, what are your thoughts? You think this is going to break
Yeah.
out and go higher, or
That's
and
a good
pull like?
question. So it's currently at resistance, so we have to take that at face value.
Yeah.
International is in rotation right now. The thing that I see right there is what's called the three white soldiers. So that's a
Yeah.
bullish candlestick reversal formation. I have to assume that that trend will stay intact until it reverses. But I would take a breakout in a weekly close seriously
Yep.
and start
That's
considering
exactly.
international stocks, look for relative strength in
What are your
different
What are your
places.
thoughts though on
Exactly.
But
It's
like this is where my
overbought.
thing.
Definitely overbought. Could be a divergence if it, especially if it pulls back. We're actually probably
Yeah.
going to find out next week if the U.S. is still in rotation or if we are
Hmm.
going to start. If global investors are going to pull out of the United States. I think
Exactly.
the bond market's going to be a big factor in that as well. So looking at the TLT chart, the 20-year Treasury bond,
Hmm.
if that starts selling off, we're going to probably see that the US is probably getting pulled out of. If TLT can hold up, though, I think that ratio grid that you showed earlier would reject resistance and
Yeah.
US stocks are fine. So TLT is
Exactly.
kind
Yeah.
of like the measurement.
I totally agree. And yeah, I mean, I use a lot of these longer term trends, even if like,
Yeah,
emerging markets, again, might have a little bit more to fight and stuff, but you're starting to see, some improvement there.
yeah.
Just, I get concerned a lot of times with just, like, and I think this is the craziest chart out there right now. I mean, people don't
Yeah.
want to
Oh,
talk
yeah.
about it.
We've been long gold all year, gold leap
Yeah.
call options. Yeah, it's
Oh, wait, I
interesting.
played the wrong one.
You can see that the gold chart has been gaining its strength also because the dollar has been dropping so much. And I think the dollar's been dropping a lot, not so much based off like currency manipulation, but if the dollar is weak, it makes the US more easily available to export their goods. It makes it easier to
Exactly.
export goods, which helps the overall deficit. So that's kind of the relationship between gold, dollar, and what's going on there.
Yeah, and this is one of my favorite charts, and
Gold
it's not a
SPX.
popular chart, but it's gold versus the S&P 500, and it's a 6 month chart, and you're getting these prices, these valuations going back all the way to early
1990,
1900s.
1910.
You're
Wow.
seeing large MACD crosses. You're getting into a consumer. I think you're getting
Look at
into a
the Great
commodities bull.
Depression time period, 19 in the 1920s. You can see the crossover. Gold had massive outperformance in
Yeah.
those
No
19.
one, no one talks about the dot-com bubble to 2008,
Yeah,
but like
seriously, yeah.
stagflation here. I think the
Wow.
biggest thing right now with the stagflation is GSG is a commodities,
Yep, commodity ETF.
fund.
Yep.
I like looking at, like we had this initial breakout
Yeah.
kind of thrust. We gotta look at a monthly chart, 6 months a little too long. This initial breakout thrust in 2022
Yeah.
relative to the S&P 500, and now you're kind of getting this push again. Um,
Interesting.
Again, MACD divergence, RSI divergence as well too. So I'm going to be completely honest. Like the reason I'm a little concerned with the geopolitical situation going on in Russia, Europe,
Yep.
some of the
Definitely.
Israel stuff going on over there. And I also think like, China's selling our debt as well too, which is going to
Yep.
cause rates to go higher
Yep.
because we need to attract. So, and I think you're going to get into a stagflation environment based on a
Yep.
lot of those things where
Slow
whether it's
growth, high inflation. You can see the
exactly
TLT, the
so
interest rate chart breaking out.
10-year
TBT. Oh yeah,
TBT.
you can also look at the 10-year.
Yeah.
I just like to trade calls
Oh.
and puts on TBT.
Oh yeah. Oh yeah. These are good. Yeah. I was like I use like I think I have like TMV is like the 10-year or something I use.
Oh yeah.
It might be the same thing. Yeah.
Yep, there you go. Sorry, what were
Yeah.
you saying about
Yeah.
Carter? I kind of cut you off.
For it.
So
Oh, what was I saying?
you were basically talking about your geopolitical concerns.
Oh yeah, I just think that like all those parts moving together just cause a pretty easy, not easy, but a pretty, well reformed bet on, just commodities in general. Maybe
Yeah,
not this chart,
oil's
but
coming
crude
back.
oil.
Yeah, crude oil.
Crude oil, for example, again, has been a pretty large, like support level for, again, it kind of broke out of my base, but again, these long wicks here, like I like the long wicks. This is a
Yeah,
weekly chart. I mean, if you started building some oil positions or just looking at commodities in general, it's like they're holding up well.
yeah.
And a lot of these commodities firms get exposure through the futures market,
Yep,
and
definitely.
they actually use treasuries for collateral. So sometimes you're actually clipping a, 4, even 5%, dividend yield and getting some alpha as well too, off of a lot of these funds. One of my favorite charts too,
Yep, DBA,
DBA.
the agriculture.
Agriculture. That's
Yep.
just this is similar to what that GSG chart kind of looks to me in some way.
Yeah.
Um, GSG maybe hasn't done it because it has exposure to both like physical commodities as well as oil and different things like that. But
There's
again,
also
you're making.
WPM, wheat and precious metals.
Oh, I like that. I like
Yeah.
wheat and
Look at that. That's a beautiful chart.
banger, banger. Yeah, I like that. So yeah, you're seeing a lot of like opportunities in metals and different things like that. I mean, I think it's interesting.
It is.
But getting exposure to it might not be a popular thing because
No,
it's
not at
been
all.
so
No tech stocks.
obsolete. It's been out of the market. It hasn't been in trend since basically a lot of our grandparents were in their working career, and a lot of those people who are grandparents, aren't advisors or aren't really, like they might. It's a different time. They made their money, so
They
and they made their
definitely
money
made
through
their
the
money.
markets later.
The
They
boomers.
made their money through the other cycle, but if you can
Yeah.
profit from both the commodity cycle and potentially an equity boom as well too, and being able to look at these longer term trends, I mean, this is how you generate wealth for yourself and your family.
Definitely. You got to look at the sectors that are in rotation and looking at those ratio grids on the higher time frame, double checking the
Yep.
oscillators, the momentum indicators. One individual stock that I'm long on, it's MOS. Or no, sorry, not MOS.
Mosaic.
Let me just double check.
I was gonna say as a
Not
Mosaic. I'm
MOS.
I'm a pretty big fan of Mosaic potentially soon. That's a fertilizer company, and you're getting that MACD cross coming up here soon. You're kind of seeing this break out some pretty good monthly candles. That's an interesting chart too, especially relative to the S&P.
No, it was this agriculture. I can't even remember. I'll get back to it later.
Yeah, MOS anyways is a fertilizer company, but I'm a fan of them in the near future.
Definitely.
It's an inverse bet a lot of times against markets and stuff, but like you fertilizer is different in my opinion
So
too.
then, what's your overall opinion on the tech sector? You know, big, large cap tech stocks: Nvidia, Tesla, Amazon,
Yeah,
Google, Netflix
I mean,
reported earnings. They did well because they're unaffected by tariffs, and they got those different
yeah,
stocks.
I think I mean again I think you just have to understand that tech is still in a longer term uptrend. I
Yeah,
mean again we go through relative analysis again. You might get a little bit. You're getting a little bit of that breakdown now
yeah,
of tech relative to it. But if you're looking at it on a just like a longer term sector, it's been the best performing one. Like yeah, maybe
definitely.
that trend's
Oh
broken, but you're
yeah,
having this intermediate, even relative to I don't know. You're even seeing XLP or something like that versus the S&P
yeah.
500. It's like you don't get charts like
Indices.
that are just that trending. You're getting some breakouts across different sectors, but I'm a fan of tech in general,
Yeah.
and
Oh
I
yeah,
think
because
a
we're
lot of
young.
times,
Like, tech's gonna be the future. Come on. Unless we
yeah,
go back to
like
the Stone Age. That's it.
I'm totally fine with tech. Again, like for me, it's like it's very similar to looking at the S&P 500. It's like yeah, like you could have took some stabs. Like I took some stabs at like my Googles, my Amazons,
Yep.
my Teslas. When we were kind of hitting some extreme oversold on the RSI.
I made a
But the
video on
reality
that. I
is
was like, break and retest, oversold
yeah,
everything, flip, close all the shorts, flip long, and then you can manage from there.
Yeah, and so I added for myself around down here, but again, like we're still in an intermediate shorter term downtrend, and this is where you need to see buyers hold that August, or that April 7th low there.
Yeah.
And if we build consolidate here and be able to break up higher, I think, you even kind of see it in Bitcoin a little bit too. I mean, I
Bitcoin
don't know
has
how
really
Bitcoin's
good relative strength right now.
is
Really, really
relative
good
strength, and I
relative strength.
think, and in my opinion, I think Bitcoin will be bottoming before tech or just the markets
Yep.
in general.
It's a
And
leading
again,
indicator.
really, it's showing relative strength. Depending how you're drawing your trend lines,
Yeah.
you're
It's
could be
breaking.
potentially starting to fight a breakout starting this week. So if you see that, I think that's really bullish for just markets or risk
Yep.
on markets in
Risk
general.
on. Definitely.
So that's my view of it personally. But again, I try to keep my charts pretty simple. Oftentimes I have the 200-day moving average
Yeah.
too. So again, 200-day moving average, MACD. Try to use monthly and weekly charts, and then like kind of my biggest thing is I like to see a pretty strong close out of the weekly range. Again, like looking for strong candles. Again, full body candles or just really long wicks. Like something like this. Like this is initially when I got long,
Yeah. That
Bitcoin.
was a good one. Good trade.
Yeah,
Yeah.
and
Nice,
initially
nice
as
kind of
well for
consolidation breakout.
Tesla as well too, kind of very similar.
Yep.
You can
We took that as
breakouts. So
well. It was also
yeah,
post-election momentum with Elon Musk
exactly. I
coming
mean,
in
that's the
there.
thing is I then he wrote it and I was
Yeah.
able to trim some. I personally am a believer in Tesla, even though everything
Yeah.
that's going on,
Oh
the
yeah.
sentiment hate on it actually kind of makes me like it even more. But that's
Yeah. No.
just me.
Definitely.
But yeah, I mean, again, like you're getting to some old technical breakout zones. I added some down here, but would like to see some good candle structure
I'd
and a
like to buy
breakout,
a
and of
lot
course,
at like 170, 180, if it ever got there. I do like
yeah,
the Optimus robot opportunity, you know?
I do.
Yeah.
I like them a lot, and like I mean, like for me, it's like I'm gonna be holding it, and like if
Yeah.
stuff got really bad, like like I could see price, like it would be interesting to see price come down to here. Like I could see 180,
That would
where
be
these
if the
two kind of
S&P took out the lows, likely in that
yeah.
scenario.
So it'd be interesting, but I would like to see a consolidation and then a strong weekly close here. Probably add some more on, and then continue to add more on, and I
Do the
mean,
breakout.
I'm
Yep.
not a big person at using Fibonacci's and stuff, but you could probably draw some Fibonacci extensions
Oh,
and
yeah.
figure out where it could be heading next.
I really, really like that. That's some really good analysis, Carter. I love it.
Thank you,
It's nice to
appreciate it.
talk with somebody who's also a geek. And of course,
Yeah,
all
I
the
know,
people I
right? It's
talk
so
with and
nice.
work with, they're geeks too, but it's a different kind of geek. you know.
Yeah, exactly. So, but yeah, what do you got planned for the rest of your day, man?
Um, I'm gonna be studying for my Series 65 exam in about 2 weeks, so that'll be fun. Studying's going well. I'm getting about 65% on the practice tests. I need to get about 70 to 80%, but it should be pretty good. What about you,
Should be good.
Carter? Where can people find
Actually,
you? You can message me your socials,
oh
Instagram,
yeah,
YouTube, I don't know, email.
yeah. I mean, honestly, like I don't really post much about the finance stuff. I do have like a, my Instagram is mooseman16. My nickname's Moose.
Okay.
So but
Mooseman16.
yeah, like you like again, it like my Instagram's nothing like finance related, but if people message me, like I love hopping on calls and talking to people.
Definitely.
I do have a Twitter. It's just like ES no BS Moose. There's really not much on there. It's just me like kind of like asking people about footprint charts and kind of that's where I get a lot of my information is off of Twitter and other traders and stuff like that too. So,
Definitely.
but yeah, feel free to message me and my name. You can look me up on LinkedIn as well too. Like go ahead and just reach out and I like to be a resource because again, yeah, I think like you said, teaching this stuff out makes you better, and I like to get a bigger community because the footprint community is pretty small and there's always different things and nuances out there, and I really haven't found a great community out there that can answer a lot of questions or really come together to learn more.
That means we got to build it. Let's build that community.
Exactly.
We'll be the leaders. You'll be the leader of the footprint community.
Oh, I might have to be.
Yeah.
I might have to be.
That'll be exciting. Well, Carter, thank you so much. This is an amazing episode. I'll be sure to get this on YouTube. Comment down below what you learned in this episode, and we'll see you guys later. Peace. Well done. Okay, now, peace.